Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, March the 28th. The year's 2021. Let's talk trading. Weekly open and gap. Just remember, these videos are for educational purposes only. Your results may differ from mine. Money management. It's important. Remember to take the profit before the market takes it back, and it will take it back. So, we're beginning the week. Let's take a look here at the weekly gaps. And we've got 1, 2, 3 that haven't filled. The pound dollar gapped up and it is now dropping. We are 30 pips below or now 31 pips below the weekly open, which is the same as the daily open at the moment. And as we look at the chart, the opening range for the year, that first day, the high, the low. We are now putting in the opening range for the current week. You can see the month opening range is above, the low is above the current price by 142, 141 pips. I can't seem to get it out fast enough before it changes, but that's okay. And you're wondering why am I sending the video out so late? Computer was acting weird. I don't know what was wrong with it, but that's why I was almost thinking, okay, time to get out the backup computer. And the funny thing is, the backup's faster than the one I normally use, but that's a whole different story. 122 pips above the yearly open, 163 pips below the monthly open. And as you can see, we just touched that inside bar low there, the high of the day, 94.7. Actually, we missed it by what, 0.5, and price is coming back off of that level. Inside bar action only, there's enough to make some money here on the daily and the weekly, and there's even a few on the monthly. So if you like these horizontal line trades, you just have to look up these pairs, see where the high and low of that inside bar is, and trade accordingly. And just in case you're wondering, you can use the inside bar plot. You don't even need the dashboard. You could just scroll through pair by pair if you wanted. For the range so far, even though we are 9 hours into the day, no pair is over 100 pips for the day. You can see where we opened inside the upper wick zone and we fell through it. Once again, horizontal line trade. Now, somebody had asked out in YouTube land about the pivot and the gap and how to trade it. So you can see here where, let's see, where's the 0-0 candle? It's right here. So there's the 0-0 candle. This candle here was from Friday. No, that candle actually, yeah, that's the Friday candle. So you can see there was just a tiny, tiny, tiny gap, it looks like. So you wouldn't necessarily trade the gap. I want to look at something real quick here. Risk management. Remember, don't lose more than you're willing to lose on any one particular trade. Interesting, we've got a gap up here on the weekly. So why? I thought something looked kind of funny. That's the 2200 candle. That's the 0, 0 candle. Oh, this is the open. This is the close. So it did gap up and came down. So it headed. So in this particular case, here's your pivot. It's below the open. The gap is towards, so you would take the trade toward the gap, from the open toward Friday's close, from the open toward the pivot. So when they're the same, then it's like, okay, let's just take that short and see what happens. Put your stop loss somewhere where it stays within your risk parameters, and you just see what happens. And in this case, it came down, filled the gap, hit the pivot, you take it out. You can see we've got a pivot point missed here from the previous day. So that is how you trade the open gap and the pivot. But this is the daily pivot here, and they actually asked me about the weekly pivot, so we'll look at the other chart in a second or two. Range 37, it's too low. No rat trades at the moment. So here we go. We've got the weekly pivot. Man, this stuff is all jammed up here. Let me switch. Let's see if we can determine what's what. We've got the pivot at 37.74. We got the weekly pivot at 37.74, it looks like. So it looks like these two pivots are pretty much the same. Only a 0.3 difference, or 3-point difference. So we took out the weekly and the daily all at the same time. And remember, we're going to have a new month on Thursday, so we'll have a new monthly pivot on the board. So that's something to think about too. And something else, remember, I updated the TRO time indicator. And if you have these messages turned on, it says the pound forms a bottom early to late March and then moves higher into the end of April. So we'll just have to wait and see how true that is. So it formed a bottom, what, a couple of days ago here. So who knows, we might be moving up. But right now the day is down. So once again, you have to trade what you see, not what some theory tells you. So we missed that pivot yesterday. We missed the pivot 5 days ago, or in between pivots. So that's on the daily. On the weekly, once again, you can see we took out that pivot. And for the monthly, we took out the pivot also. Wick zones, we opened inside the wick zone, and we've fallen out of it a few times. The range. Now, normally when we look at this chart, I talk about the ranges, but what I want you to focus on today is we're starting the week off. So what we want to look at is, we'll drill down. We look at the monthly, the previous month's high and low right here. So you can see we're hundreds of pips away from it. So then we drill into the week, the previous week's high and low. We got almost 100 pips off the low, 108 pips off the high. So we're somewhere in between. And then the previous day. So we're looking at these, once again, these lines for breakouts, because you know price has to range. So if you switch over to the weekly, you can see once again, last week it broke out, and that previous week was an inside bar, and the previous week also was an inside bar. That's what those vertical turquoise or aqua lines show you. And that is the in and out indicator. And technically I modified it, but I did that so long ago. That was before I was doing the TRO modified, and it was just a minor modification. So I didn't even change the name, even though technically I should have put the TRO modified on it. So one of the things we want to look for, and the reason I bring this up is if you see the weekly low, previous week's low, previous month low, get down around the 20 level, same on the high, you know you're in a rat zone. And when you're in the rat zone, you're going to look for high minus close. Okay, and you can see here on the weekly last week, high minus close was 98, close minus low was 108. Almost pretty much right back where we ended the week right now, because we're at 94 and 113. So we're pretty close. Point being, if you're in that weekly or monthly rat zone, especially off the previous week's high or low, that's when you should start to think reversal. But if it gets up and starts testing the high or low, that's when you start to think breakout. Just something that we really don't talk about it a lot, but I just thought I would mention it. Because there are a few traders that like to do rat zone trades. And it's just one of those things where, once again, it's a very simple horizontal line trade. You just have to be aware of it. You just have to put that on your checklist or on your radar or on the dashboard or something. Which, by the way, there was a trader that asked me to asked about the dashboard and the high of the day and low of the day. Maybe I'll have to show you that on another video later in the week. He wanted to get alerts. So you can definitely use the dashboard to do that. But once again, simple horizontal, looking at the Walmart trade here. You can see here, short at the line. And we had a low of 57, so could have picked up a couple of pips. And I know there are people out there that poo-poo the couple of pips, but if you're trading $100 a pip and you pick up $200, you know, I guess it's all relative. Maybe to somebody that's chump change. I'm sure it is to maybe Bill Gates or Jeff Bezos or Warren Buffett, those guys. But, you know, to a lot of traders, you know, that could be, you know, a nice score. And it adds up. I mean, $200 a day times 5, that's $1,000 a week. You'd be grossing $50,000 a year trading. So it once again, it just depends on your level, your comfort zone. Some people, you know, they don't have what it takes to trade $100 a pip. They just don't. That's why Walmart says you got to know yourself. And it's okay if you can't trade $100 a pip. If it makes you too nervous. If you're a $5 a pip or $1 a pip trader, that's perfectly okay. And one of the other things we're going to probably discuss sometime future, you know, this whole thing about trading, I just keep seeing it on these forums, people coming out with these indicators. And, you know, in fact, I've written another tool. I'll probably give you a teaser later this week on it. I might even ship it out in batch 4, but I might want to test it. Might go out in batch 5. We'll just wait and see. But it's more of a tool. It's not something that you really need to trade. Actually, I'll just tell you, give you a real tease. It's a new version of My Notes. So, but you just really don't need a lot of fancy stuff. Just trading this Walmart horizontal lines. If you can do that successfully, that's pretty much all you need. It really is. There's a few things that can put the odds in your favor. So remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.